Hey everyone, welcome back. Ready for another deep dive. Today we're tackling Annuity Care II. Sounds pretty technical, right?
It can be, yeah.
Well, lucky for us, we've got our expert here to break it down. So what we have here is marketing material from Diversified Insurance Brokers, specifically for Annuity Care II, and it's issued by the state life insurance company.
Right.
We're talking retirement income and long-term care, and all from one single product. Sounds almost too good to be true, doesn't it?
Well, that's what we're here to find out, right?
Exactly. Like we always say, got to do your own homework, maybe talk to a financial advisor before jumping into anything.
Absolutely. Never hurts to get a second opinion.
Okay, so let's start with the basics. What is Annuity Care II?
In the simplest terms, think of it as a single premium deferred annuity.
Okay, so single premium means.
One lump sum payment up front, no need to keep making payments year after year.
Got it. And deferred annuity means.
The money you put in has the potential to grow over time, and you only pay taxes when you withdraw it. So it's like a tax-sheltered savings account for retirement and potentially long-term care.
You got it.
So the marketing material keeps mentioning principal protection. What exactly does that mean?
It means your initial investment, that lump sum you put in, is safe. It's not going to disappear.
Okay, that's reassuring. But then they also talk about market-linked growth. Now, doesn't that mean there's some risk involved?
Well, there's always some level of risk with any investment. But in this case, your money isn't directly invested in the stock market. Instead, it's linked to the performance of specific market indices.
Indices, like the S&P 500, things like that.
Exactly. So if those indices perform well, your annuity has the potential to grow at a faster rate.
Interesting. But how do you know which indices they use? That must be important to check, right?
Absolutely. It's all about due diligence. You want to understand how much risk you're comfortable with and what kind of potential returns you're looking at. Makes sense? All right, let's dive into the long-term care aspect. So let's say down the road I need help with daily living activities. How does Annuity Care II actually kick in?
Well, it includes a long-term care benefit that would provide a certain amount of money each month to help cover those costs.
Okay, so like a monthly payment to help with things like in-home care or maybe assisted living?
Exactly.
And how long do those benefits last?
There's a base benefit period, which is 24 months for single contracts and 30 months for joint contracts.
Oh, so a little over 2 years of coverage for a single person and 2.5 for a couple.
That's right.
What if you need care for longer than that?
There's a provision called continuation of benefits.
Yeah.
Basically, depending on your age, when you need care, it extends the benefit period.
Oh, interesting. So how much longer could those benefits last?
If you're between 40 and 69 when you need care, you get 6 additional years. If you're 70 or older, it's an extra 3 years.
Wow, so potentially 8.5 years of coverage in total.
That's the idea. It's all about providing a safety net for those unexpected long-term care costs.
Okay, so we've got the retirement income angle and the long-term care coverage. But what about flexibility? Can you access your money before retirement if you need to?
Yes, you have some options there. You can withdraw up to 10% of your account value each year without any penalties.
That's good to know. But wouldn't that cut into the money set aside for long-term care?
To avoid that, Annuity Care II has 2 separate cash value accounts. One is for general use, so you can withdraw from that without affecting the long-term care benefits. And the other account, the LTC-AV.
LTC-AV.
It stands for a long-term care accumulated value. That one owns a higher interest rate, specifically for those long-term care needs.
So it's encouraging you to save for those future care costs. Smart.
Yeah.
But what exactly does the long-term care benefit cover? It can't be everything, right?
That's true. You'd want to check the specifics, but the marketing material mentions home care, assisted living, adult daycare, and nursing home care.
So a pretty wide range of options. But hold on a second. Most long-term care policies have an elimination period, right? Does that apply here too?
It does. There's a 90-day elimination period with Annuity Care II. So you would be responsible for the costs of care for the first 90 days.
Okay, I see. So let's say you need home care for 6 months. You'd cover the first 3 months, and then the annuity would kick in for the remaining 3.
That's a good way to put it. It's important to understand how the elimination period works in practice.
Definitely. Now let's talk taxes. Any advantages there?
Well, if you already have an annuity that's not performing well, you can do what's called a 1035 exchange.
A 1035 exchange, what's that?
It basically allows you to roll over your old annuity into Annuity Care II without triggering any immediate taxes.
Ah, so you can potentially upgrade to a better annuity without getting hit with a big tax bill right away.
Smart. But what happens if you don't end up needing the long-term care benefits at all?
Good question. Any money left in the annuity when you pass away goes to your beneficiaries. So it's not a use it or lose it kind of thing. Okay, that's a good feature. But before we wrap up, how does this compare to traditional long-term care insurance?
Well, with traditional insurance, you have more options to customize your coverage. You can tailor it to your specific health situation and needs.
So it's a trade-off, really. Annuity Care II has that fixed premium and those built-in benefits, but traditional insurance offers more personalization.
Exactly. And don't forget, this is just one piece of the puzzle. It's not a magic bullet for everyone. You've got to consider your risk tolerance, your overall financial goals, and your individual health history.
Absolutely. Talk to a financial advisor, folks. Get their professional opinion.
Couldn't agree more. Knowledge is power, right?
Right. So, to wrap things up, think about this. When it comes to financial decisions, how do you balance flexibility with those guaranteed benefits?
That's the million-dollar question, isn't it?
It really is.
Yeah.
Is that peace of mind worth potentially sacrificing some control over your money? Something to think about.
Food for thought indeed.
And on that note, we'll leave it there. Until next time, happy deep diving.